Is Jerome Powell purposely causing a housing crisis or accidentally? Well, I don't think either, and here's why. I think in the last week before the most recent Federal Reserve Board meeting, every business news source and real estate news source was tracking the Federal Reserve as though somehow they were changing the direction of the market. And in fact, they do make actions, and the market does seem to respond right away, temporarily after they make a decision. But almost every pundit gets the effect wrong, and certainly in real estate, we had nothing but a blizzard of misinformation. Because I think at the end of the day, nobody knows what's going to happen. We can all measure what happened. We all can evaluate the current market conditions. But I don't believe anybody has any idea what's going to be happening in the next month, 3 months, or 6 months. That's been true as long as they've been in this business. And let me show you what I mean by that. And I think trying to predict it is really a fool's errand. One of the most preeminent experts in the market, in the real estate news space that people use all the time, is the chairman of the National Association of Realtors, Lawrence Yun. Now, he might be a great human being and a great person. I don't necessarily have anything against him particularly, but I just am shocked how this guy has his job when really in the last 14 years, he's been as wrong as throwing darts at a dartboard. In 2008 and 9, he was one of those cheerleaders as the market did go off a cliff. When it was obvious that it was over the cliff, he was still talking about how the market was going to be rebounding in the short term. So he wrote this week on Monday, even with the Federal Reserve raising its short-term rates, long-term interest rates look to move only slightly. The mortgage market has already priced in the latest federal move. Well, he couldn't be more wrong because the second the Fed changed the rates, mortgage rates jumped up about 0.25% from about 7%, closing at 7.29%. So really, if you had done nothing but throw a dart at a dartboard to guess at what would happen, I believe over time you'd be as accurate as watching the chief economist of NAR. And I think it's just because these are complicated matters that nobody really understands or knows the reasons why. But again, looking at what is in terms of the market, what is the data? What do we know is actually happening? And what we do know about the market is that overall the market's performing fairly well. Let me show you what I mean by that. The most important statistic to watch is inventory. And inventory, while it rose over last year, which was the great pandemic year, it started to come back down and has been keeping pace with last year, well below the prior 2 years and way below the pre-pandemic level 2018. So inventory appears to be consistently low and getting lower. In order for a housing market crash to happen, there has to be more sellers than buyers, causing sellers to cut the price to get rid of the inventory. While that's true in some pockets, nationally, that's clearly not true. Here's some additional data. Redfin does a great job. They show where's the median sales price. So they show the last 3 years, the median sales prices all went up and then kind of leveled off in the fall and wintertime. Now, I will say that in my 36-year history in this industry, that generally prices did come down a bit after the summer season and rose up most sharply in the spring. And that's been a historical pattern. Nothing unusual, but prices are still above where they were from the beginning of the year, above last year, and certainly above 2 years ago. When you go a little deeper in the data, you're going to find that this has been a historic pattern. Here's Redfin showing you since 2013. Now, the different colors are different areas, and the red's the national price, but you can see that since 2013, prices have been on a steady overall rise, but the rise and fall is a natural part of the seasonality of real estate. And that's not only true nationally, but it's true in individual markets. But what's also true is over time, that number has only continued to go up. The prices over time have only continued to go up. A lot of reasons why, but the most important thing is that's where the market has been headed. So if you're writing real estate news and you're too lazy to tell the truth, what might you do to get some additional hits or additional clicks so you can drive some advertising? Well, here's an example. The latest one, the worst offender this week, I think is Yahoo News. The housing market, I love the titles, is already breaking in these 15 cities. Now, breaking could be as in you break in a certain direction when you're running, you break to the left, you break to the right. Or breaking could be like breaking in half, falling apart. And I think that word is there because it sounds worse than it is. And they could say, oh, we didn't mean it's falling apart. We just meant it's moving in a down direction. They don't really say. I think this is purposely left ambiguous and purposely needless. But worse than that is the data. So why is that? Because when you read this, what's the proof that the housing market is breaking in these cities? Well, the proof they give is that the defunct cities where beleaguered home shoppers may soon catch a break and avoid stress of paying too high because escrows are canceling in those markets. And the 15th worst is Riverside, California at 20%, 14th worst is Nashville at 20.9%, and so on up to about the worst market they're talking about is, I think, Jacksonville, Florida at 30%. So what they're saying is because 30% of the homes that went into escrow canceled, that's proof of the market breaking. Not telling you how many resold eventually. In my experience this year, to my great surprise and relief for my clients, every property fell out of escrow, went back into escrow with another buyer. So when they break, does that mean the price is going down or does that mean temporarily? And also, look how many of these are in Florida, 1, 2, 3, where you had, a natural catastrophe. You also have these markets are very heavily builder oriented, where new home builders were building houses, and home builders tend to build too many too quickly, then back off, and too many, and that's the nature of home building. That's not true of the resale market. That's true of the home buyer market overall. In markets with a lot of home builders, it affects the resale market as well. So is this really proof of a market breaking? Yahoo Finance doesn't discuss that. They just leave you with a title, give you some impressive looking numbers, and then expect you to make that conclusion. So what's really happening? Well, as long as inventory is relatively stable and housing prices continue to maybe slower move up, the housing market is not crashing today. That doesn't mean it couldn't crash tomorrow. If Russia throws nuclear weapons at Ukraine or China at Japan or North Korea or South Korea, there's a million things that could happen. But as we sit here today, the real estate market is a fairly typical November market, healthier than average overall in the United States with pockets that are suffering. And don't be fooled. So what should you do? As always, if you can afford a property and it makes sense for you to move, to live, to raise your family for whatever reason, then buy a property. If it's an investment and it cash flows, for sure buy the property. Great time to get in real estate, as long as to lock in the hedge against inflation and tax deductions. Should you sell? I don't know. What's your situation? Are you a senior looking to move to a lower state to avoid taxes or to retire or change of life instead of a house? You want to live in a condo. If it's right for you, it's a great time to sell. Don't let the market information or misinformation in the news in any way dissuade you. If I can help at all, call me, text me, email me. I'm Bill Gross, the LA Probate Expert. And as always, make today your best day ever. Thanks.